G'day traders, Mindset Reset. Beautiful sunny day here in southern sunny Canada. Now the last little while we spent a lot of time talking about mastering a setup, one setup. Encouraging traders to shy and stay away from trying to trade markets and start focusing on rinse and repeat, high probability / possibility, easy money making trading setups. Now we have front side, back side, day 1, day 2, day 3. We have 3-day setups. We have 3 session setups. We have first red day. We have first green day. We have inside days that are signal days. We have 3 days of breakout traders in the markets. One of the easiest reproducible trading setups that shows up every week, of course, is day 3, Wednesday. Monday's day 1, the opening range. So come back. Go to any chart, look at Friday's closing price. Friday's closing price on Monday morning is where the auction process begins from. And that market will expand the range in both directions, one direction, and that establishes Monday, the opening range in a new week. So when you understand that price level that everything starts from on Monday is where everything starts to move away from. We have an opening range. Day 2 typically expands the range. Now we can go back and look at one really important thing for traders to grasp and to understand, and that is that most breakouts fail. Now a lot of traders are just focused on the break of a high or low of a day, and they lose perspective of when a day is actually broken out of and trading outside of that range. And that's where I talk about the Fugazi. They're chasing candles, they're looking at candle action, but they lose sight that a market has actually broken out. And markets only do 3 things. They will break out, pull back, and continue in a trend. They will break out, pull back, and reverse. Or they'll just trade back and forth inside of a trading range in a high-low perspective. Now, understanding whether or not you're trying to just take trades, catch highs and catch lows, or try to catch a move, as opposed to hunting out specific setups, and the ones that I like to look for are the ACBs, the ain't coming backs. And often, if you understand day 1, day 2 typically expanding the range, we'll have reversal opportunities on day 3, we'll have trend trade opportunities on day 3, and often, depending on where that market has initiated from and whether or not it is already in a breakout, those markets may not come back, whether they're reversals or trend trades. Now, if a market breaks out and it doesn't come back, the next day typically, in a lot of cases, depending on front side, back side, will reestablish a new boundary. So, for example, we can have a market that closes in breakout. People are trying to counter trend it all day long. They blow out their accounts. The next day it consolidates in a narrow range. And again, in the back side of the week, we'll now get a day 1 breakout, a day 2 consolidation, and a day 3 reversal or trend trade opportunity on Free Cash Friday. The reason why I'm talking about this, and Stephen and I always joke about this, we call it breakout trading for dummies, and talking about ourselves, because you have to dumb it down so simple that you cannot mess it up, that you cannot fail. Now, I talked about Stephen. Stephen won't even look at a market now until 3rd hour. So not only does he not look at a market until it breaks out, but he won't even look at a market now after it's broken out, unless it gives him the trade setup in the 3rd hour. What that means is this: he doesn't chase anything at 9:30 because it's New York Open and he's trying to catch a move. He knows that his specific type of setup that he's looking for will not give him the reversal opportunity entry until the 3rd hour kicks in. What is 3rd hour? Typically 3rd hour is going to be that 10 a.m. hour. Now sometimes we'll get a market that breaks out between 9 and 10 a.m., consolidates between 10 and 11, and it might reverse at the end of that 11 a.m. hour, or into that next hour. Now, you have to know your setup intuitively, so that if that's the case, you know, several traders will say to me, well, that's not in the timing window. That's in Stephen's timing window for his best easy money making trading setup. The reason why I'm talking about this, and Stephen and I always joke about this, we call it breakout trading for dummies, and talking about ourselves, because you have to dumb it down so simple that you cannot mess it up, that you cannot fail. Now, I talked about Stephen. Stephen won't even look at a market now until 3rd hour. So not only does he not look at a market until it breaks out, but he won't even look at a market now after it's broken out, unless it gives him the trade setup in the 3rd hour. What that means is this: he doesn't chase anything at 9:30 because it's New York Open and he's trying to catch a move. He knows that his specific type of setup that he's looking for will not give him the reversal opportunity entry until the 3rd hour kicks in. What is 3rd hour? Typically 3rd hour is going to be that 10 a.m. hour. Now sometimes we'll get a market that breaks out between 9 and 10 a.m., consolidates between 10 and 11, and it might reverse at the end of that 11 a.m. hour or into that next hour. Now, you have to know your setup intuitively, so that if that's the case, you know, several traders will say to me, well, that's not in the timing window. That's in Steven's timing window for his best easy money making trading setup. So the point I'm trying to make, and I've stepped back a little bit from creating technical videos for a few weeks just to give a bit more perspective on certain things, because there's over 1,000 technical videos. Now, a lot of the material's been taken, dumbed down, filled with filler and all these other things, when in reality, trading setups are very simple. Day 1, day 2, day 3. Trend trade, reversal trade opportunities. 3 levels to work from: high of week, low of week, closing price. High of day, low of day, closing price. If we have, you know, I've talked about this before, if you can count to 3 and tell time, you can make a lot of money. And that upset a lot of people, but now traders are seeing that, and it shows up week in and week out. And the reason why that sounds insulting to some people is that, you know, again, I've dumbed it down for myself, and I've learned stuff from Steven, and Steven keeps peeling back the onion to make it even simpler, because you need to make it so simple that you cannot screw it up. And when the penny drops with that, and you start to just focus on the easiest, highest probability opportunities, you only need 1 to 2 of those a week to significantly compound your trading account. Then the next most important thing, of course, is managing yourself, not chasing moves, not over trading. Like I know several traders will hit 4 or 5 trades in one session, and my response to that in my own head is, why wouldn't you just hit 1 or 2 with size, or 1 with size? If it's a best trade candidate, hit 1 with size, 1 and done, get off the screen. Don't screw it up. Don't try to take more trades. Don't try to, you know, catch more pips, make more money. Build your trading business on rinse and repeat behavior and rinse and repeat trading setups. Get out, exercise, exhaust yourself physically so that the brain can't do any damage to you from being, you know, agitated, impatient, nervous. The clearer you get on your behavior, your mindset, your trading setups, your scalability of those trading setups, the timings, the simple rinse and repeat opportunities that show up consistently over and over again, the zero stress, zero emotion trading business starts to grow quickly in size. It's the same setups over and over again. The same setups over and over again. 3 session setups. If you're trading the US session, it could be a 3rd hour, 3 session, day 3 setup for a rinse and repeat scalable opportunity. Doesn't matter what other gurus say, doesn't matter how much filler of information and you know, other things to make it simpler. It's either really, really simple, or it's complicated and you can't reproduce that, because it creates analysis paralysis, it creates mumbo jumbo, and it's not easy for you to not only reproduce your execution in live time, but also even your process to find the best instruments based on the same criteria, which we will talk about in a very quickly coming video on breakouts. How to 3 different types of opportunities to look for on breakout trades that show up again and again and again on any instrument, in any session, on any market. So you're going to have, for example, you might be a gold bug and you like gold, and gold's moved in Asia, but you want to keep trading gold, but the actual better trade setup might come on silver in your session. Gold moves first, silver might move second on the day. It just may be that type of opportunity. It's the setup that I'm hunting, not the instrument. Not my favorite instrument, not trying to read a market, not trying to catch moves. It's the same setups over and over and over again. If I don't see the setup, I'm not interested anymore, because I get those setups inevitably probably 5 or 6 times a week at least, and I only need to find 1 or 2 of them on any instrument. Hunt the setups in your session that are easy, zero stress, zero emotion, and scalable in size for easy money-making trading setups. The simpler you make it, the more you peel back the onion, as Steven says, and dumb it down, and you know, trading for dummies 101, the more consistent, reproducible, and scalable your trading business will be. And get out and exhaust yourself physically so the mind can't play tricks on you and get you engaging in impulsive, irrational, and emotional behavior. And get on with your day. Lock in the profits, walk away. It's as simple as that. It's as simple as you want to make it. And like Paul Tudor Jones says, make trading a pursuit of pleasure. Have a great day, traders, and may the markets go with you.